Hey everybody, Bob Icino. So I always like to tell people that the technology that allows us to speak with you randomly from different cities and connect to your computer and speak live, do these recordings is a wonderful thing. But sometimes there are problems with that technology, which means the entire segment of the Market Think Tank this morning with Scott Bauer from Prosper Trading got cut off. So I brought Scott back. Thank you, Scott, CEO of Prosper Trading, for doing this. I wanted to talk to you because we actually have a little bit of an advantage here. So I want to talk first about what you did talk about in the part of the show that people missed. And then I want to ask you again about window dressing, which I think was important for people to know. But first of all, you said you like the banks, and we were talking before this morning, and you said that if there was a spike in volatility, because JP Morgan was one of your main ones and it was falling, but vol could spike, that you might sell calls rather than buying calls or buying a call spread. So tell me what happened since the open. We're about 3 hours in now.
Yeah, so we are seeing the banks weaker this morning, and we are seeing some added volatility, though off of the highs. I'm looking here where they were earlier. For instance, Goldman Sachs had a spike up in volatility of about 10% earlier this morning. That's down to about 5%. JP spiked up about 6%. That's still trading about 4 or 5% here. But I still really like the banks, Bob. Is this a one-off from what happened with the hedge fund, the mutual fund over the weekend? You never know, right? You never know, but you kind of just have to take advantage of opportunity. And so I am still bullish here. So I am actually looking to sell put spreads. I haven't done it quite yet. I'm looking to sell put spreads right now in both JP Morgan and Goldman Sachs, very short term this week. And so I want to take advantage of not only the increased premium, but the fact that it's a shortened week with equity trade only to Thursday gives us one less day here. So in JP Morgan, I'm looking at selling the this week, the 150, 147.5 put spread. And in Goldman Sachs, I'm looking at selling the 317.5, 312.5 put spread. I really like the Goldman Sachs one better than the JP Morgan one right now for two reasons. Number one, bigger pop in volatility. Number two, from a technical standpoint, if you look at the charts in Goldman Sachs right now, the 50-day moving average, which has been really solid support, is right around 315 or so. So that's almost right at the sweet spot of this put spread that I want to sell. So that's the one I'm leaning towards selling.
So let me ask you, I'm going to go ahead and put up a Goldman Sachs chart. That's the one you said you like better, right?
Yep.
All right. So let me put up a Goldman Sachs chart here if I could. I've got my E-Trade platform here, and I'm going to expand the chart open to full screen. We'll do a pop out. That'll work better.
There we go.
All right.
Progressive, Goldman Sachs. What's the difference? Just trade them up.
So Progressive is actually a stock that Mike and the Stock Think Tank have been long for a little while now. We're getting that pop we were looking for. As a matter of fact, look at that. It's right at our target to sell it right now. So we just reached our target on Progressive. So let me put up Goldman Sachs here for you to take a look at the chart and kind of talk about it. Now, correct me if I'm wrong, the Goldman Sachs trade will still be, as with the JP Morgan trade, you still might look at some of those April 16th call spreads down the road, right? But now you're looking more at shorter term selling of put spreads to take advantage of that vol spike while I wait for the chart to come up here.
Exactly. No doubt about it. So if things do calm down a little bit, whether it's later today, tomorrow, Wednesday, as the market digests this news, perhaps return to that, more normalized volatility. Yeah, then I would look to buy some upside call spread. But again, you're trading options here, and you need to take into account premium levels. Premium levels are based on volatility. Volatility goes up, you'd rather sell premium because you're able to collect a higher credit. Volatility goes down, premium gets cheaper, you'd rather buy things when they're cheaper. So right now they're getting pretty expensive.
So here we've got the Goldman Sachs chart. We've got us down about 1.64 as I speak to you, looking about 322. So the strikes you mentioned, 317.5, 312. You said they expired this week. The question I have for you is, we've got the shortened week. Do they expire on the shortened week, or do they carry over with any sort of risk over the weekend?
So they do not carry over. So the last time to trade them is Thursday, because the equity markets are not open Friday. They still will not expire until Saturday. So from the clearing firm, they actually still don't go through the expiration process until Saturday, when they would hit people's sheets. Now, what actually happens at expiration, and this is a big, really important, fundamental piece of information that every option trader needs to know. On a typical expiration, on Friday expiration, market closes 3 o'clock Central Time. You have on an expiration 90 minutes, an hour and a half, to actually exercise options on that day, on expiration day. So you have until 4:30 Central Time. So let's say you're long or maybe even short an option that's maybe near being at the money, and maybe there's some risk to it, but you never know. There's news that can come out after the market closes. And we know that there's aftermarket stock prints. So you've got 90 minutes additional time whether you want to exercise that option or not. So in this week, because last day of trade is Thursday, can't do anything after Thursday trading wise, but you still have that period of time after the market closes to exercise that option or not.
I'll tell you what, given the time frame of this option, I really, really, really like that trade. And that's not something that I normally do. But if you look at, we like to look at percentage B in terms of managing momentum. And admittedly, we have adjusted the inputs to percentage B to our own process, but it's showing really oversold levels. And also the purple line on my chart is the 50-day, which we're already showing support at, which comes out at about 314 or so. So if you get support, you're liable to pop up above that put, that higher put strike, that 317.5. There's a high probability of that happening. So I really like this.
Yeah,
so,
and the premium, Bob, on this is like $1.40 or so, maybe $1.30, $1.40. That's a lot for 3 more days of trade this week.
Yeah, I'm going to go on record as saying I'm probably doing this as soon as we hang up. So taking a look at, let me close this out and let me talk to you about, let me stop sharing here. And let me talk to you about what I mentioned earlier, something that's called window dressing, which is, we talked about this family office having this problem where they got forced block trades that got them out of trades. Hedge funds, family offices, large institutions, they have issues like this. And one of the ways they try to mitigate issues is something called window dressing, which you hear about, but a lot of people don't really know about. Can you give us just a couple of minutes on what that means?
Sure. So window dressing is a strategy that mutual funds, portfolio managers may use to improve the appearance of their fund's performance in a particular quarter, when they're showing it to clients and shareholders. And what that really means is you get towards the end of a quarter, at the end of a reporting period, and fund managers or funds can sell out of non-performing assets that they've had and buy into maybe some of the high flyers that have done well in a particular period of time, so that then when they report to their shareholders, they're actually showing, a Tesla, a high flyer is on the books, perhaps for that period of time. Is it illegal? No, it's not illegal. Is it something that, is frowned upon? Yes, because that's exactly what it is. It's window dressing. It's almost kind of misrepresenting, if you will, how the portfolio has actually performed during a period of time. So, the average investor, Bob, probably doesn't even care. The average investor doesn't look at it and they say, all right, this is what it did for, the quarter or whatever. But listen, I know if me or you or any of my friends, family that I talk to, you have investments somewhere, you need to take the time and really understand, the ins and outs. You don't have to understand maybe every last asset that fund may be into, but you got to know what your broker, your investment manager, your advisor is doing. You really got to take time to do that.
Yeah, I agree. I mean, again, neither Scott nor I are personal financial advisors, and we're not trying to give you financial advice. We're trying to give you friendly advice. that you should put as
Exactly.
much time into looking behind the window dressing, which really means looking at the curtains. Window dressing, if you think about with the theory of where that phrase comes from, people walk by your house, they see pretty curtains, they see plants in the window. They don't know if you're a hoarder
What's behind?
those
Right.
curtains, right? So because if you're in a fund and you're in several different investments, your IRA, your portfolio, whatever, those people work for you. And you have a right to see what they're doing and when they're doing it. Even if they only report it on a monthly basis, you can take
Yeah.
a closer look at it. You should put as much time in it as you do your fantasy football or your NCAA pool. By the way, many condolences for Illinois. I did not think that was going to happen, my man. I did not.
Thank you.
My sister went to Loyola. One of my best buddies, including yourself, went to Illinois. So I had my heart in both teams. But I got to tell
Yeah.
you, I really, anyway.
That was a
Scott,
tough one. That was
yeah.
a tough one.
Where can people find you if they need to find you?
Prospertrading.com. It's Prosper Trading Academy. Website's prospertrading.com. You and I are kind of all over the networks together as well, but I appreciate it, man.
Yeah, you can accidentally find both of us all over.
Yeah, exactly.
Full disclosure, I like to tell people we have somebody from Prosper every single time. They are not a paying sponsor. I'm a member. So I like to have them on because that's the best endorsement I can give. Scotty, thank you again for being here, man. I really appreciate it. I will see you soon.
You got it, bud. Take care.